Wednesday, man. Today is the FOMC minutes at 2 p.m. Eastern time. As we've been talking about over the past few days, is this consolidation right here, right? This is a weekly and daily consolidation. The market is chopping. The market is undecided. Okay, so just when it seems like bulls are about to step in, like right now, we have a demand zone right here. But every time it seems like bulls are going to step in, and we hope for that breakout, sellers step right back in and push it right back down into that demand zone. Maybe it'll sit around in this internal liquidity for a minute, but then it pushes right back down to this buy zone. So this is what you need to understand, right? Now, you don't need news, okay? You can just look at the chart, stick to market structure, price action, you'll be fine. But how much more of a dope trader would you be if you can just understand the sentiment of the market, right? So you must be wondering, like, why is the market stalling? Why are bulls looking I don't want to say weak, but they don't have the strength to push us out of this consolidation, right? So we have three catalysts, man. Three catalysts, y'all. So number one, we still have these tensions with Iran. Trump told them that after the ceasefire, we're gonna hit Iran strong. You feel me? So whenever there's fear in the market, you're gonna have sales. Investors are gonna sell off. People are looking to sell. That's just the way it works. Like historically, there's fear in the market, and I encourage everybody to look at the fear and greed index. Right. We also need to look at the VIX too, and I'll be keeping y'all updated on that as well. So we have renewed tensions with Iran. So whenever geopolitical risks increase, institutional traders typically become more defensive, meaning they're taking more caution, right? They're not gonna step in and just start buying stuff, like buying assets, right? They're taking caution because of this tension, right? And that doesn't always reverse the trend, but it can stop bullish momentum, in which we've seen over the past few weeks. Number two, our second catalyst is oil. Okay, so the second catalyst is oil for sure, man. Like as tensions increase, oil prices moved above $75 a barrel. So now we're right back above $75 a barrel. Rising oil prices create inflation concerns because higher energy costs ripples through the economy. You feel me? It affects the pocketbook. It affects everything, bro. It affects manufacturing. It affects travel. It affects all type of stuff, man. So that's the second catalyst. The second reason why you may see the market stalling, and also, right, we do see some strength from these sellers. Like they pushing strong, bro. So, and I'm gonna say, also, right, I said number three, right? The third catalyst for sure, man, is the Federal Reserve, right? So today is the meeting minutes, right? The minutes suggested policymakers are still concerned about inflation and may keep interest rates higher for longer, right? Our new guy, Warsh, he made a statement saying that he may just give us one hike, one rate hike, right? Right now, everybody is divided on, hey, is that the best move for the economy or not? Markets generally don't like uncertainty around interest rates, man. So you will see the market stall, right? There's some uncertainty around these interest rates, man. So none of these events change my higher time frame analysis, right? My framework is still intact, and that's what I love about having a strong framework. The weekly chart is still consolidating. What they did change was short-term sentiment, okay? That's why I say, y'all, don't get caught in this chop. Don't get caught on these lower time frames that get chopped out. They keep trying to like scalp, which, hey, go for it, right? Whenever there's imbalance, there's money to be made, right? There's money to be made within the imbalance. But the question is that money worth it? Is it worth the risk, right? So just when buyers look ready to push higher, these headlines gave sellers enough reason to defend resistance and keep price trapped inside the range. So look, man, I'm going to tell y'all this. Stay focused, stay locked in. Always know that when you're looking at the chart, man, the chart is nothing but buyers and sellers, right? Behind buying and selling are emotions, right? You have logic, you have emotions, you have psychology, right? And that's based off whatever the sentiment of that market is. You feel me? So don't get it twisted. We are still in a bullish market, right? Don't get look at the bigger picture, right? We're in a bullish trend, but we are flagging, right? We are consolidating, we are chopping, okay? So for all my options traders out there, man, be careful. Don't get stuck holding the bag, because that theta will tear you up. We chopping, I'll wait. You know what I'm saying? That's just what I do. For all my futures traders, right? I trade both. I love futures, though. I ain't gonna lie. on the day trader end of things, man. Listen, y'all, I'm not going to make an entry until we get a break and retest out of here or a break and retest out of this demand zone, man. I got chopped out for $600 on Monday. I'm still in the green, right? I'm still in the green. I'm still in the surplus overall, but I gave some of that bread back on Monday because, you know, I wanted to test the waters a little bit. My entry wasn't bad, but it wasn't great at all. We got to remind ourselves to only go after great entries. This your boy Ron Legacy for Bad Trades to Cash Days. I'll get at y'all soon. 100.